Welcome everybody, it's the Crypto Sniper, coming at you. So in this video, I'm going to give you a Bitcoin update. That's going to be later in the back end of the video. Stick around for that, it's important. And it's both good news and it's also slightly cautionary news, depending on what time frame you are. So wait for that. Also, I'm going to be taking you into XRP and I'm going to give you a little peek into Lumen as well, often bundled together for various reasons involving people that were involved in both projects, but I'm going to be making the bull case, not tomorrow, unlike our gold chase now mega reward 100x type trade on the market sniper. This is one that is coming, in my opinion, may go a little bit higher and then may pause and pull back for a little bit before it eventually goes for its full-blown run that, in my view, could turn out to be somewhere like a 32 to 33 times, a 33 to times on XRP, that is Ripple. We'll also pop into Lumen and show you where it is and standing on it. These I've put in our larger status type tokens, which you can go and watch our status video, which ones are included on in that, which runs to a number of particular projects that are likely to play a role with government and state in whatever new initiatives and new money that are being brought down the tube for you. That's right. Of course, cash is now being criminalized in Euro world. People holding large amounts of Euro, even though it is official government money issuance. Cash now bad. Cash now bad. Whatever's bad, whatever they're saying, you almost want to invert pervert because that's who they are. You want to hold cash. In fact, when you come onto a community, was just talking about the 4x25 portfolio. You divide it in four. Cash, that is notes, that is both dollars, euros, all the majors, and I mean out of the system, in physical paper, in your hand, under your control. Keep 3 months living expenses for sure in your bank accounts, but don't keep much more. Then one of the other quarters, precious metals, that's going to be a combination of gold and silver. Then equities. That can be gold miners, a couple of bulls on a military industrial complex. We've got a particular market that we're very popular, keen to be on, that you could literally have an ETF for without having to even stock pick. That's a big one. That's a national, in fact, it's a transnational global area where new capital formation will be taking place, in our opinion. You can find out about that. That falls into the equities quarter. So you've got cash, precious metals, equities with your mix of miners, military industrial complex on the long sides. Hold your nose. And then the final quarter, of course, and very important and could be real moon shooters, is your crypto portfolio, which is what we've spoken of, and the status tokens are part of that blue pot holding, and that is a non-leverage trade. However, also what comes with this discussion we're going to have around XRP is the eventual opportunity to also do some potential leverage trading in time, not today, not tomorrow, not on Monday, but is coming to you, and how we think it's going to play out for XRP, and a little bit of a Lumen look as well, and then we'll get into the Bitcoin trade. So let's go straight to the charts and get the hell on with it. So here we have it. This is Lumen. Now I want to just show you on a smaller time frame what I think it might potentially do. So we've got an HVF structure here that we've picked out. It's been on a flat bottom. You know, it did miss out to a large degree. So that is there, that low is there. This is a lower low. So we consider that overall part of the squeeze that has gone on, and looking like you could get up to around 72 cents to the upside on XRP, trading at 51 cents right now. So you could have been in a little earlier on that at around 40 cents, now 51, but still a bit to go in terms of that. But where's it going to go longer term, and what about the bigger time frames? At the moment, I'm on the 3-day. So I want to take you into a couple of interesting charts for the statist game that we've discussed, that is Ripple. And, you know, if we go out, you will recognize this chart, Ripple people, and in fact, anybody who's watching it. This overall structure, let's take some of the draws out the way so you can just focus on the price. This overall structure saw Ripple pretty much miss out to a large degree on the 2021 bull. Yes, it had a bit of a move, but then it got spoiled early a little bit. It didn't make a new high. Now, ironically, in a technical parlance, the fact that they did not participate to the same degree. Remember, Bitcoin made 69 on a previous high of 20 ish, depending per exchange. So that was 3 and a bit bigger, 3.3 bigger. You can see quite clearly that you didn't get anywhere near the over $3 levels. Must have been around $3.33, it potentially all the threes, and this time it didn't even make $2 in that end, and that had a lot to do with the SEC and the attention that it got. Now you might be thinking they're a good crypto if they've been picked on by the SEC. Well, I wonder if that was a containment trap to keep a lid on it, and that at some point you're going to play a bit of catch up as well for the next round, if it is to play. And it's been heavily brought into, it's heavily involved in many of the testing. So it's going to play a role in, I suspect, many country, nations, CBDCs, at least at a rail level and possibly more. So when you're looking at these bigger times, we prefer to actually log scale it, so it looks more like that. That shows you the percentage moves. And I want to highlight to you already that this particular squeeze structure has been very, very good for Ripple before. We have 2 samples. It's not the hugest sample, but this is on a proper big time frame now. So we're on the monthly. You can spot it right there. That's the monthly time frame. Here you go. Bomb, bomb, bomb. There you go. 3 beautiful impulses there, and then round and over here. You've got a little bit of a super dip there. That's a little bit of a spoiler and makes for it to be a bit of an imperfection. But that overall squeeze ended up seeing you going from a fraction of a cent. So that's 1 cent over there. You could have been in on that at less than a cent, and you would have seen, as I've already said, probably $3.33. So you could have got in less than a cent and seen $3.33. Now, I was hoping that you'd make some profit at that level in the event of that happening. Less than a cent, $3.33. That is 333 if you only got in at a cent on an averaged out basis. So that is a pretty interesting move, and I think you would have enjoyed that as part of the 2017. I don't know what Bitcoin was in 17 prior to the high on its high, but I don't think it got a multiple as big as that, as well as it's done. Of course, it's a more established token. It's a heavier market cap to lift. So the point I'm making is you've seen this actually effectively occur once before, bar, I think it could even be an exchange related, but there was a little bit of a bedwet moment there which saw that dip down. But providing you were not excessively leveraged, or you were only getting in here, if you're an investor, this wouldn't have concerned you if you were holding. And if you got in during this period here as you were moving to take out this third high, and that was the beginning of your break, you would have done brilliantly, and that event over here is not a problem for you. You would have put your stops over there, you would have got long, and you would have done just marvelously. So the key part is, can you see the similar structure that is forming here in Ripple on the macro time frame? Quite clearly, as I say, this is going to have some role to play in our overall view. And you might also notice that it is popping out of right here, this channel structure that I've just drawn in terms of the second impulse up and down. In fact, it's been at what we refer to as the relative low 2 point, which is the equivalent of you are here. You love that when people do that and show you on the map, but you are effectively in the equivalent point of being here, the relative low 2, in and around, and you are just moving up. So if I wanted to be super accurate, I'd probably say round about where that dot is there. So you could go up and over a little bit and go marginally higher and generally be better off most of the time, but there could be a small easing. But generally you'll notice these third impulses are far more subtle, while you get real church steeples on your first and your second. That's highlight of the volatility, and I'm in log scale. So that also has an effect of reducing the amount of woo woo, up and way back down again. So in log scale, you can appreciate that these third impulses are generally more calm. So maybe less pumpermentals. Now I showed you on the lower time frame how you probably got a 71. That's above this level here, and you might well go a little more. Remember, the target is potentially a beginning point for a great exit, but it doesn't mean it's the absolute high. It starts to be a localized high maybe afterwards. You might get up to 80, and then you could chill out and hold 70s or be mid 60s on a pullback, and that would be calming before the eventual move to the upside. So let me just buy some more real estate there and pull this all back. So that's in essence what I am prognostifying as a potential outcome on the basis of previous conduct and of course HVF method, for which we are the specialists. Click the first link below to build real wealth in crypto as the bull is potentially returning. But note, we're on a monthly time frame and this isn't tomorrow. So there's actually a bit of inching upwards, and there might also be a small requirement for drifting back down again. So you could have a demand destroying event still that occurs, sees the stock market come off, but the crypto space now, as it represents more future money, holding up better. In the same way gold held up very well in the events of March 2020. Yes, it still dipped, but it dipped and it came pretty quickly back up and ran. So you might find that the crypto markets, or particularly the key cryptos that are likely survivors, that are going to continue on past as the status CBDC intervention and new money world is being brought down on our heads, those are going to have somewhat of a dip. Maybe some of the small non-viables will get positively wrecked. That we will have to determine for ourselves. So overall, what happens when this occurs and how far might you go? What's the juice? What's the likely squeeze? Well, first of all, because that third impulse hasn't happened, we can only approximate for now. We're potentially in the beginning of an up leg that will top out and ease and come back down. Fine. That's all well and good. But we can at least have a guess in the meantime as to how that might turn out. So I'm going to put those levels back on, and I'm going to say, okie dokie, we could see a $16.77 being run. So where did he come up with this 33 title? Well, 33 times, you're at roughly 50 cents, and you could end up at $16.77 on our targeting on an approximated basis. That would see a 50-cent item having to go up 33 times to get knocking on the door of a $17 target if that is to occur. So for people that are fans of Ripple, that is quite some move to get up at the 16.7, and there will be a little bit of catch up in that, I would imagine, also for that. So is it worthwhile slowly accumulating for a hodl pot Ripple? Will it form part of, and I explained our quartile strategy for investment, for building wealth in reset times. Not everybody wants to trade, not everyone has the time to trade. Some people are working jobs, have half an hour in the morning before rushing off to work or out there in the evening. How do I position if I'm in that state? I can't sit and, 9 screens day trading every minute. Not what we do, by the way, at all. Neither can I. But how do I just position? Accumulate. Dollar cost average, accumulate. The status token of XRP, in my opinion, it is potentially going to go to full-scale usage, and its price could appreciate immensely in the transitionary events of what we expect is coming, which is further implementation of CBDCs or interim measures that are approaching CBDCs first, and all of those aspects are coming. So now you know why. 33x on XRP. Also worthy of a watch, slightly less explicit right now. This is the primary theme. We've told you a little bit about these status tokens. We've also highlighted XLM, which interestingly you will note is in a similar type situation. And is also you are here at the RL2 point. In short, we think it's in a point of recovery right now, and it failed as well to make a new high. Its bull market run was capped. It did not go higher than its 2017 cusp of 18 high, in the same way as XRP. Ironically, the underperformers in the status segment I see as being overperformers for technical reasons. Of course, there might be fundamental reasons. Of course, there might be the chosen ones for the government. Of course, they might have been capped in the amount of gains they got for 2021's run-up. Bitcoin did not have the full bull market. I think at 3 times is 3.3-ish, a little bit on its 20K to its 69 high, was actually a partial bull market. It's a full, but not a full fiber. You know, what I like to call the club sandwich. Full enchilada bull market. It was kind of more an economy bull market for those times. And with that clarified, it went about 3.3 times. Don't forget the 20K high was roughly a 20x. So it's quite some comeback to just a 3x. It's like, you just 3x'd, just a smidge over 3x. So in terms of these, they will have further contained. They've set up macro continuation patterns. You may recall, we were the people that spoke of a 2.5-year structural pattern on Bitcoin. And we will show you that again when we do our update on Bitcoin. As a reminder, note this thread, go back and explain and remind people of that. But we had a 2.5-year continuation pattern that included previous highs, all the secondary high, and said, you've got Bitcoin set up, and that's one of those rare moments where you can go leverage long as well as being investment Bitcoin, and you would have done very, very well with those setups. You will also be shown where our targets were exceptional, and you got in and around out on the left shoulders of the first head and shoulder on the 64K at around the 55s to 59K mark, depending what platform you were on. So that was an excellent exit, albeit later it did do marginally higher at 64. You had to sit through a major collapse that actually saw 29s be run and the volatility be much higher, and then after that 69, a sustained pullback. So that was a great exit for the first cup gold nugget, a 2.5-year continuation pattern. Why is that interesting? Why am I talking about that here? Because here you have 2 tokens that I am showing you that potentially on a fundamental level are going to have a role to play in what's coming down the tube, and at the same time technically are doing what Bitcoin did technically the last cycle, with its 2017 high at 20K, its capitulation to 3,200, its subsequent run to, what was it, 12, 14,000, and then its COVID 4,000 bottom, and then its rush third impulse that saw it break early, with the new money being laid down before you. Proliferation. And you saw the run up. You want to be positioned for those moments. This is what I focus on for my community. You can both invest your way through this process and occasionally maximize with trading opportunities without being a day trader or a weekly trader or having hours and hours during the day to do it. All you have to do, click the link below, book a call, become part of our community. Our goal is to get you a multiple of that you invest by becoming a member for a year that not only learns how we go about doing this, but actually sees it being implemented in our community with a group of very well-trained high-end HVF traders, including myself, giving you everyday updates in video, voicemail, chart links, etc. And you need to come on board and understand what it is we're talking about and what that means for you, for your investment portfolio and your trading portfolio. So this is a very good sign, but it's not tomorrow, guys. Why do I say this? Big time frame chart. Most people are impatient. They want when, moon, now. If you're not telling me something that's going to make me money in the next hour, day or minute, they're upset. Well, I'm afraid that's not necessarily coming, but a decent move up into range and then a gradual calming could be on the cards for both Lumen and and Ripple, which I've covered, and these runs could see highly extensive subsequent moves, and I will spare you the Lumen target that we'll discuss in greater detail in our community and have done, but you can get a feel for that. You can make your choices. There will be other great opportunities which you will be missing, because unfortunately we've got to we've got to look after the people that have respected us and given of their energy, and that is invariably money, fiat, crypto, to learn and grow, and they get served first. But you have now got a watch list item which you can go put in, and you can earn your way into the community if not yet of means to do that, and you're welcome to book a call just to find out what it's all about. There's no charge, and they're lovely guys that'll talk and help you. They are actually trader investors that were clients too. We don't hire salesmen. People have to understand what we're about, got to want it. They've got to be able to have a chat in investments, the challenges of being in crypto. They've got to have understood it. They've got to have seen a couple of bull and bear environments. They've got to look you in the eyes, hand on heart, and say, I really benefited by making that plunge and taking it on, and I'm better off as a trader and an investor on a multiple of ways, not just financially, but calmness, comfort, socially, mentally, in terms of my positioning for this great reset transition that is coming. That's right, crypto friends. So you've now got Lumen as the flight path trajectory that I would expect to see it. You've also got XRP with the 33 times multiple, with a bit of targeting to give you an idea. Early, not yet hardened. It could go a little more. It could go 18 or 19. It could be a touch less. But whichever way you're looking at it, you're looking at a substantial from 30, 25, 30 minimum, potentially 33 plus times multiple, but not yet. And this is the key thing. Monthly chart, each of these candles represents a full month. We might be talking about 6, 7, 8, 9, 10, 11, 12 months even before you get the run and break. You could bleed up a little bit now. Remember the Ripple case, we're in an upside for 71 and a little beyond. But there could be some economic events that see it also come off a little bit and soften first, and then go quiet and dull, and everybody gets bored and stops watching. That is when the volatility squeeze merchants that are the crypto snipers are really watching. And when everyone is getting bored and posting the memes with the man stick poking Bitcoin and everything else while you're sleeping, we are actually setting all our traps for that first twitch that triggers our key trip-in events, that gives us super tight risk management with a very close stop that allows us to scale up on size for a managed loss and gives you a nice oversized position if you don't get stopped out with a major move to the upside. So highly volatile, big moves to the upside with constrained risk is the key and the fulcrum upon which I built all my trading and all my investment. And I'm telling you exactly how to do it. And I'm also telling you the best setup for doing it. And you will get nothing but those setups in our community. Book a call on the links below. Alternatively, trade these things with simple FX. You can use crypto to trade crypto. You can use crypto to trade FX markets as well. We've given gold longs and various other things. But understand, if you don't understand money management, stops work against you. If you don't understand risk reward management, you can scalp losses for ages and whittle your pot down. Okay, you really need to get trained to do that. If you just want to be an investor, sometimes positioning and hodling can work best for you. All right, let's go on to Bitcoin and leave those two tokens now, and we're going to give you an update on Bitcoin. So I appeared on All In Crypto recently. And I said the following thing on All In Crypto. Give him a follow, by the way. Decent, straight up guy, and always making an effort to just give you what his take is in the market, clean as it comes. So first of all, we mentioned that first cup gold nugget. It's been a while since I've been doing it. There might be new viewers, but we spoke of this macro setup. This was the macro setup. By the way, we had the targets corrected. Let's show you that. Let's see if they're still drawn on. Look at that exit. That's such a messy chart for you to have to see because there's so much detail and work on it. Let me take it to the weekly time frame and just compress some of that. But this was the exit up top there. You could have been long on those wicks or on the second go. So that was the break and feign. We teach you about 5 stages of a breakout where price behavior feigns through a level and comes back in. So it breaks and feigns back in, breaks and feigns back. It's playing footsie with the line. It's not sure, Goes super low volatility. How many times do we warn that the very low volatility is the beginning of the move? Breaks and then a return move. That is different to a break and feign back in. That is footsie playing with a line. This is a determined, okay, we're giving up on cover and we're going to run for it. Whoops, it's cold out here. We're going to come a little bit back and we're going to stay close to the tree line while we can check it out. And then we go. That target took you out on the peak of the left shoulder of a head and shoulder that you would later see formed in and around. Let's check it out. It was, I believe, mid-50s. Let's just have a look. 56,532, and then you would have missed the 64 only by about 8 grand, and you would have not had to see a 28,908 pullback. Imagine closing 75% of your position at that time at 56,000. So many people got so badly washed out, and that first pullback was brutal. We saw that as a falling wedge. We got back in. You could have ridden that upside again to 69-ish levels before you would have then started to realize this was a bear market round about those same 55 levels. So it was very, very intuitive. This was a key draw. Now I'm saying to you that same event that has already happened for Bitcoin is queued up for the likes of XRP and Lumen. But let's have a look at this. What is going on here? So we've spoken before. We've reverted bull on this. It would be a very elaborate and lengthy bear trap were we to get slammed through these lows now, in my opinion, that it makes it a minority event. It doesn't mean it can't happen. That would be very unfriendly, and that would constitute a bear trap if you were to have something like that. There might be some people that might try and manufacture a rising wedge structure. So you've always got to bear in mind these things could technically still happen, especially if the demand destroying event was brutal and the control structure really honed in on Bitcoin. Don't forget, the banks have been failing, and the on-ramp banks particularly have been failing, and now you're seeing the attack vectors on Binance, which is the biggest exchange, after Bitfinex was attacked when it was the biggest exchange. So you're seeing the centralized exchange getting attacked. Of course, FTX went down. You're seeing all of these particular events taking place. So you can't rule out that possibility. However, this is not my go-to expectation in terms of this, particularly as proliferation is likely to come on. Remember, the first cup gold nugget broke during the period that mega millions were being announced in the name of saving you from the March 2020 events that will not be named. So overall, I don't bias to the rising wedge argument, but I warn that it could exist. Where do you accept you're wrong? This is the head and shoulder draw, the key 25K that we've highlighted over here. This is your left shoulder. This is your slightly complex head. Note again the low volatility that preceded the bullishness, as we highlighted there as well. When the run first finally broke cover, it was quite low there. There was a little squeeze in there. We called it the second most important HVF in the bull market of the macro 2.5 year setup. But now you find yourself in an environment where you have broken, and this is a little bit kind of toppy, but this is your structure. But I want to highlight something that's going to give a lot of people some encouragement and will undermine, in my view, that rising wedge structure. When in doubt, where are we? Especially when you start to get sucked into the weeds of the lower time frame. You've got to remember, big picture dominates. This is one very bullish candle, dear people. This candle right here. So I've now gone back to the monthly time frame, and I want to highlight to you that that is one very bullish candle. This one right here. We refer to it, we actually have a name for it. It's the look one way, go the other way candle. So you open there, you sold off. That actually was your right shoulder of the inverted head and shoulder, by the way. You sold off to the key level that happened to be also coincided with the previous high and the 20K mark. We gave you that as a potential bottom where you could buy into an inverted head and shoulder. You could have bought the bottom of that wick. Then you return all the way up to where you opened and then smash by an even larger level. The candle is longer than the wick, even though it has a long lower wick. This is the look one way, and it headed and sniffed its floor, found its floor, said I'm done, jumped hard off that real at its back support, smashing it up, and ran the 25K and trotted on for a further $3,300. That is a super strong on the candlestick level candle. And I can't help but stress this enough. Whenever you're in doubt about things around direction, you can just go back to candlestick charting. Remember, it followed an in-betweener candle that was kind of an indecision doji after a major bull move. This was an aggressive return towards the 25K after drift off exhaustion selling, intermediated with some small green candles as well. So you've got one of the strongest monthly candles in that followed an indecision candle and a very strong bull candle. So you surged, you rested and thought. Indecision can also be point of tight volatility because the range was low, and rest. There was a key level of resistance, 25K 2x5 from the man who's now 5-5, and then you got that dip, that test, and that smash. These three candles collectively point to way more than a rising wedge, which is a bear trap. They point to real strength, and at this level with this month fold, one of the worst candles of the entire bear market, which, as I say, we were warning of from 55K after checking whether we were going to get a further push up. After that was invalidated, you had the worst candle, and this accompanied all sorts of FUD, which involved three arrows capital, etc., 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 all going bust. So you have 2/3, 3/4 re-engulfed the worst bear candle of the downside move as well. So that is very, very positive generally, and it's pretty consistent upway mark. You draw the gradient on that. I should do it neatly with a straight line rather. You draw the gradient on that, and that is brisk, and you are well away. So we are right now on the April Fool's Day. You knew I would have to be born very close to April Fool's Day, didn't you? And that is a big cover. You could almost go for 3/4, not quite 3/4 I'm saying, but if you include the low end of the range, I would say you actually have done more than 3/4, halves around there. You've taken 3/4 of the full range of the worst candle that was associated with terrible fundamental news and FUD, and the biggest sell-off of the bear market that in of itself has already now run for an extended period. Is actually longer. People didn't realize that during that bear market it would keep coming. They hated on us saying it's still bear, still bear, still bear. That started. There's 2022 final high. You've gone. It's been more than a year. It was 2021 that it occurred. We're now in 2023, and I argue that this is probably the first bullish candle, the beginning of 23, the January of 23 events. So you've gone more than a year and a bit during that. So this is good candles analysis. What have we got here? We've called for the 42.5, which was a neckline up top here, and a 40,000 that runs through this big flag over here. That's easier seen on the lower time frames, but just while we're here, we've called for a move at least up to there. I would probably take some profits on leverage trades anywhere from the 40,000 to the 42,500 as key levels of significance, particularly if impulsive and getting stretchy moon candles happening. So that is where we are on Bitcoin. Right now, however, because I said it's largely good and a little bit bad, what's the bad bit? The bad bit comes on the lower time frames. You may actually test a little bit down into these wicks. So overall, the monthly is good. The hodlers will be broadly fine, but I just wanted to highlight that this price behavior here generally is a bit toppy. You're getting a shooting star here. You're getting a lot of wick resistance and knockback. Don't forget you've had the 27.5, which is roughly here, and you are congesting around it, and you got quite a violent rejection on the 29K, which I will show you now on these lower time frames. So let's let the jaws come back in a bit. We can do that, and we can drop into the lower time frames. You will see that you're getting a bit of resistance. This is not typical continuation, that marginally higher high. A little bit awkward, a little bit of churn and chop. You're not going to get necessarily immediate gratification. I don't think you're about to get a stretchy super green candle on this immediately, but you could get some mild sell-offs coming here as part of this. So you could get a bit of grain ranging. It needs to calm down. The volatility needs to come down, and then maybe calm it down, and then squeeze again for upsides potentially. So you could get a little bit frustrated. You could be marginally on average day for day a little lower than where you are now, and you could get some moderate sell-offs. It does feel now that there's a bit of a floor here around about the 27,000 mark. So you've only wicked through the 27,000. So if we pull you through that, let's drop that time frame again to the 4-hourly. Most of the things that have happened at the 27,000 you've only just wicked through. It's down here. Except when you're on this lower time frame like the 4-hour. So you've been holding the 27. Let's wipe our face a bit there. You've been holding. By the way, when you take HVF method right down to the super low levels, we went out on Twitter and said, you're going to make the target, I expect, but then after you crash through here, you're going to soften. So we saw this. We said there was a squeeze. We shared it to our community on the small time frames. Sometimes we're watching on all time frames and the micros. I said this is going to see a mini surge in Bitcoin. It's exactly what happened. You could have traded the small. But when it gets slapped back down and ran that, I said, but after that, you're going to soften. When I saw this has happened, you've broken that. You have a period of soften. And what did you get? Soften, new lows and sell-offs. So this gave you a key bunch of levels that are super, super key. But you are staying above the 27,000 right now, but you're going to chop and churn a little bit on these lower time frames, and you might get a little bit more downside. Right now, I don't think it's downside. I think you've been drifting off. You can see the buying activity coming in on our funnel. You've got a final hammer there. You may even get a little squeeze higher, but it's going to be a whole bunch of nothing. A little bit up, a little bit down. You see you've got a broadening structure here. So you would have been thinking, Francis is wrong. We're about to go to the moon. And then you just got out of your broadening structure. So you're getting a mixed bag of smaller time frame patterns in multiple directions, and you're going to be a little bit up, a little bit down. So it's not an environment for leverage trading. You haven't got anything super key. I might say on the very low time frames, 15 minutes that we're on, you might drift up again, but that could be totally engulfed in time with a little bit of a setup and a test of some of these lower levels at some point as well. But the macro is what should drive you at the investment level, and you should not be intimidated by that if you're not leveraged. Okay, so now you've had an update on Lumen, why we think it will join XRP, and that missing the bull run a little bit to some degree is going to see it get an even bigger run in the subsequent move that could supersede the likes of Bitcoin and other tokens. You've also seen what we think of Bitcoin and why on the macro level everything remains the same. We're good for that 40K to 42.5 range, so that could see a technical run of as high as 43,000 potentially and some change. In reaching all of those, that would be super optimistic. I'd be quite happy to have got out at 42.5 and maybe taken some at 40,300s on those levels, and see what happens after that. We'll see what happens. Maybe your demand destroying event. Don't forget, links below for accumulating internet gold with Bullion Vault at $50 a month, whatever you like. Grab the link. After you've got a few thousand there, sell it off. Go and buy yourself the actual physical, have it delivered through Pure Gold, also in the link below that you can use. We'll deliver anywhere. And you can trade using our Scandinavian Capital Markets broker below, and FTX, my simple FX, my apologies, I said FTX. Can you believe he said FTX? No, bad idea. I got an email finally from them. Did you guys get an email? By the way, that was a Freudian slip. Let's talk to you about FTX. Small bit of information that may be interesting for you on YouTube. People that were hurt in FTX, listen up. small bit of information for you. It's come to my awareness that there are hedge funds that will purchase up to 15% of total provable balances that were lost. That tells me that you probably, in a guessing game, when this finally gets settled, would probably get at least 20 cents to the dollar, maybe 35, possibly if we're lucky a bit more. I was affected by that. Some of you watching were maybe affected by that. You can either try get something now and you'll get about 12% of that 15%, and then you'll get a bonus if and when they collect your claim later when it finally gets settled. Please understand, these lawyers are, consuming a lot of the money, and the longer they take, the better it is for them for racking up fees. Bernie Madoff's Ponzi scheme wrap up, the lawyers took nigh on $1 billion. That said, people were still paid back on the dollar. If the market is dictating and the people with information are prepared to pay 12% within the first 40, 50 days and give you a further 3% when they get settled, taking you up to 15 cents in the dollar. My personal opinion is you're probably going to get 20 to 30 cents in the dollar, if you're lucky 35. It may vary if you're FTX US, FTX international as well. I'm expecting the international guys to get doubly stuffed, so who knows. But there is something coming out. The news did come out, and I hope that's hopefully some degree of good news, having lost 100% of control over your money, getting some of it back. But understand, there's a time value of money. Maybe 12% today with a little bonus is better, because it could take 3 or 4 years and you may only get 15, 16, 17 cents in the dollar, or patience if you don't need the money and you may get a bit more. This is not financial advice. I'm sharing intel for you so that you yourself can make the best decision for your set of circumstances. Thank you for watching. Hit the like if you've got any aspect of value in this video. Puppy licks, it's the only payment I ask for. A share and a like. Reddit forums, Zero Hedge. Give us a share on that information and news. Anything you like, you can take it from the video at the time that you're most valued in the video. We appreciate that. Thank you for the many birthday wishes from so many of you. Remember, we will never reply to you in the comments putting a WhatsApp group. Those are scammers. YouTube does not block them. Book a call, first link in the description, and you can become part of our community. You can talk more about investing for the reset world, trading and seeking and building wealth through the big moves that will come, both bearish moves that you can make huge profits on, and in fact there will still be things that go up that are counter-cyclical to this reset structure. You can be in the best assets for the time, both at an investment level and potentially at unique moments at a trading level. We're here to try help you do that. You need to respect us if you want all the information first and foremost, with the additional service that's offered in the community, by clicking the link, booking a call, and we'll see you on the other side. Thanks for watching, guys. Appreciate it. Have a great weekend.